Hi guys, welcome to the SavvyMoneyShow. Me, your host Sean. Today we're looking at high dividend stocks. Remember, high dividends are not a guarantee of growth, and usually they're counteractive of growth. But we're looking at something that I've spoke about before, but you may not have been following me then. Suru Capital Core. If you remember, I got into this as a way to catch Palantir before the IPO. These guys pipe the SPACs and IPO stocks, and they tend to do well out of it. Now, there's a P ratio of 1.52. If you go by Yahoo Finance, is given 40% dividend. That is wrong. It isn't 5.25. That was last year. It's a $2.50. That will be payable later in September. And they're giving you the option of taking up to 100% of that in stock, which is bullish in my opinion. I like the fact that trailing PE is 1.5, the price to book is 0.79, and that they're a holding company. They're basically at their net asset value. Then net asset value plus the dividend. They're at $13 a share. Net asset value is over $16 a share. So they're $3 undervalued. Big money's going to come into SPACs again. Big money IPOs are going to become favourable again. And this company makes out of both of them. Now, I think it is one to watch. Yes, the dividend is just going to be a twice yearly thing, but it is known for paying a good dividend. You may have missed it, but it's still. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, depending on the platform you use if you deposit a small amount. And we have PAX, Patria Investments Limited. I wonder how many of you are old enough to get PAX. Reference is 11.4% dividend. We've missed that again. I will talk about one that you haven't missed yet, and you have time to get today. There's a P ratio of 16.4. All of these, the financials are good. Market cap a little bit over enterprise value. 4P slightly below trailing PE, which is good for a holding company. The price to sales, price to book, nothing special. But the financials, the revenue is good. The assets versus liabilities, they've been jumping up. And I just think the fact that they still have, at the end of it all, 65 million to play with. Now, the good thing as well, 11% is a good dividend anyway, but we've missed that, so we have to look at the rest of it. They're combining to create a leading private equity with Moneda. Now, it's going to be private equity infrastructure credit investment platform in Latin America. There isn't anything like this at the moment, and they will have $26 billion in assets under management, and this is why I'm interested, in case we can get a bit of that, a bite of that cherry. BHP, we all know BHP. Now, the thing is, some of it's been falling because, China has dumped a load of, as I said a few weeks ago, China was going to. They've dumped some metals on the market. You have a well-known mining company with a 9.5% dividend yield. They're known for growing it, even though it costs a lot to mine. They have a P ratio of 14, which is below the S&P at the moment of 20. Their market cap is below their enterprise value. The price to sales is below 3. Price to book is just over 3. And you know, I'm not going to spend too much time on that because we all know Freetrade Mortgage Trust. Now, this isn't going to cost you much. You have a spare $6, you chuck it in, and why is this when we've just missed it? It's a 11.5% dividend yield, but they have just closed a $50 million first mortgage bridge loan for a 21-story office tower block. And unless you don't know, a bridging loan brings a lot of interest with it. It's a PE ratio of 7, and I know people are worried about mortgage companies. You know, market cap of 47 million. So basically, they've just given out a bridging loan for more than their market cap. Their enterprise value is 194 million. So the enterprise value is 4 times their market cap. Trailing PE of 7, forward PE of just under 4.5. So they're expected to grow. Price to sales of 3.5. Price to book 0.52. I mean, do I need to say any more? And this is going to be a good company to have. Golden Ocean Group Limited. You know, I like my tanker stocks. Here is one. I've always been about DHT and Frontline and all the other tanker stocks like Euronav. I sold Frontline when they diluted the share pool by a massive amount, and it was the right thing to do. DH2 is my favourite one, Euronav my second one. But this one, 6% dividend. You can still pick it up if you get it today. Has a P ratio of 10. It's under $12. Market cap of 2.3 billion. Enterprise value of 3.7. And a forward PE of 7. So it's predicted to grow. Price to book of 1.29. Now, what's good about this apart from the financials? If you go to tip ranks, it's not one that I use. I don't bother with referral links because I know a lot of people don't use it, and it's not one that I like to do my own price targets. But a 5-star tipster has given this a price target of $42. It has an average price target across all the tipsters of $22. So it has a huge upside on it. Guys, welcome to Savvy Money Show with me, your host Sean. Well, Freetrade are doing it again. They're teamed up with Freetrade to give away a massive £50,000 in free shares. If you click my referral link between 6th and 30th of September, you'll go into a draw to win a bonus free share worth between £250 and £2,000. You'll also be in a draw to win 2,500 tickets to Rita's virtual Paris show. Now, regardless of whether you win in the draw or not, you will get a free share worth between $3 and $200. But so for me, it seems a win-win anyway. So check out my referral link in the description below. It's in all my videos, and good luck. Let me know if you win anything. Now, before we go to the next one, we're going to one which isn't a dividend stock, but is a growth stock. just going to show you one that isn't talked about. Now this one, again, it's a payment company. It's got a forward PE of 22.5, but when you consider it doesn't have a PE at the moment, then that shows that they expect it to be profitable fairly soon. And Tip Ranks again, they think this is going to be a good one to hold. Now, it's based in North America, as you can see there. It was a SPAC transaction, and I know a lot of people don't like SPACs, but the thing is a BTIG top pick the second half of 21, and they think it's going to hit $18 price target. 4 other tipsters have given it an average price target of $14.50, and there's going to be 3 buys and 1 hold on it. Now we're going to stock I own and have spoken about before, QIWI. Now this is Russia's version of PayPal. Now 13.5% dividend. You have missed it, yes. Has a PE ratio of 4 and a forward PE of 0.07. Price to sales of 0.01. Price to book of 0.02. Now, I know it's Russian and people don't like touching Russian companies because of the regime out there, but I think it is worth looking into. It is under Motley Fool's 2 global value stocks to buy. I've been speaking about this for a year now, and I think it is worth it. Even if you pick it up for the dividend, you can pick it up for a dividend, pick it up as a value play, you can pick it up as a tech play. Anyway, don't forget to check out the links in the description below. I'll see you in the next video, and hit the like button if you, and share the video with anyone you feel could get some use from it. That's all for now. You guys have been great. Last couple of videos have hit 192, 150. Thanks for that. I'll see you later.